Joining me right now is Andersen Capital Management Chief Investment Officer Peter Andersen. The Dow Industrials down 382 points yesterday. Also joining the conversation all morning long this morning is Fox Business's Dagan McDowell and Strategic Wealth Partners President and CEO Mark Tepper. Great to see everybody this morning. Thank you so much for being here. And Peter Andersen, kicking things off with you, as we saw the Federal Reserve probably give us the most clear hint yet that, in fact, the tapering may happen this year, later this year. What did you hear from the Fed? How are you positioned ahead of this tapering, where the Fed will slow down those bond purchases?
Good morning, Maria. Well, to be honest with you, I was astonished that they made that signal so clear. Now, of course, a lot has changed since July, believe it or not, but in the face of the global uncertainty, the global pandemic, I would be very, very surprised if they actually did taper. I just don't think that that's in the cards. So many uncertainties right now, and now with the Afghanistan situation, it just piles on. So I'm actually positioned for still no tapering.
Wow, so you're not even buying it. You think maybe when it starts next year?
Well, I think first we have to work through, there's so much COVID confusion. And with the different variants and the masking confusion, all this situation, how could a Fed actually make any logic out of this? I mean, the Fed is no brighter, pardon me, than most analysts and the rest of us out here, so they don't have any additional information, and they're struggling with the same things that we are as investors. So for them to strongly hint that they will make any action at this point, I do think is very, very premature. I mean, I would love to say that it is time to do this, but given our current situation, I just think it would be a very, very serious mistake to do that.
Let me ask you about the other major story happening, and of course that is Afghanistan. Larry Lindsay yesterday writes why Kabul should matter to markets. And he goes on to say that the global stability is in danger when America comes to be seen as harmless as an enemy and treacherous as a friend. Treacherous as a friend to leave all of those people on the ground in Afghanistan, harmless as an enemy where the Taliban is not even afraid of the United States. Does this work into your approach to investing at all? How does Afghanistan play into the situation?
Absolutely, it plays in. And first off, let me say the heartbreaking nature of this from a human perspective is horrible. But beyond that, let's just talk about lithium. I don't know if most of your viewers are aware, but it has been called the Saudi Arabia of lithium. It has an estimates of $1 to $3 trillion worth of lithium. That is a huge underpinning of financing for the Taliban. And then on top of it, we have Russia and China moving in, and the phrase "my enemy's enemy is my friend" definitely applies here. So I think it will have tremendous impacts on the global economy. Remember, when President Trump was trying to negotiate the tariff war, that was one of the main things China used as leverage against that, was their production of lithium. So on top of that, we already have a data point of how important lithium is, and now we're getting a new exposure of supply of lithium that will be up for grabs, frankly, especially since America has left.
Yeah, this is a very good point on the lithium point. I wasn't even thinking about that, Peter, because I was really talking about the idea that America is not feared. And America is not a friend, and that sort of is a cloud over the entire, global economy. But you're right, micro in terms of lithium and the impact there with Taliban on the ground is a great point to make. Back in the U.S., we're focused on retail this week. We've got more retailers reporting earnings this morning. Macy's and Kohl's out before the opening bell. What are you expecting here, and what does the retail macro story look to you in the face of allocating capital as well?
Well, I'm smiling a bit because, my conclusion is COVID shoppers are just crazy. And, we are in the middle of this pandemic, even though we're working ourselves out of it. But, the retail shoppers, I think, are so difficult to predict under normal conditions, and then throw in COVID and the variants, and I don't really take a lot of weight in these current earnings and retail sales, because things are so fluid right now, Maria. You know, hopefully, once we get past this, there'll be more relevance to the data. But I think at this point, anything's up for grabs. I mean, I've been surprised by so much in terms of earnings of companies. Things that I thought were going to turn out horribly turned out tremendously, and vice versa. So it's a very, very difficult time to use this data and make any kind of analytical conclusions in the short term anyway.
All right, we will leave it there and watch these earnings. Peter, it's always a pleasure. Thanks very much for your insights this morning.